I've done some reviews of arrived homes over the last couple years. I was pretty harsh on them. And I still think I think they're pretty high on the fees, but let me explain what arrived homes does first. Basically, it's what you call fractionalized real estate, where they buy a piece of real estate and you can invest in that real estate. So let's say you want to invest in rental properties, but you don't have the money to do it. You don't have the down payment, you don't have the income or the expertise, but you still believe in real estate and you want to invest. Maybe you've got $4,000 or $5,000, and that's not enough to go invest in the rental property. You need 20% down. You need cash reserves. You need a lot of money to invest in real estate. How do I know this? My name's Brian Johnson, Senior Real Estate Property Manager with Windermere Lease Source. We manage over 1,000 units in my county, basically. So I'm involved, obviously, very deeply in this matter of managing real estate, and I know exactly how much it costs to own a rental property, and it can be very expensive. It can be very lucrative if you do it right. That's why we all dream of owning real estate. So, fractionalized real estate, like with Arrived Homes, they purchase a rental property, they make fees on it, then they rent the property out, and then they share those rents with all the people who have invested. Now, you don't need to invest a large amount. I think their minimum right now is about $100 per share to invest in a property. And then you can't cash out immediately. It's usually about a 5 to 7 year wait. Now, they do have what's called a secondary market that they have developed, and it's once a quarter that for about 1 week, you can buy and sell shares of these homes that are already in the program and already operating as rental properties. Here's a home, they call it the Humphreys in Chattanooga, Tennessee. They're purchasing the property for $399,000. Then the closing costs, their offering costs, their holding costs are $27,000. Then there's holding back some money for property improvements and cash reserves, which is smart, of $31,000. And then they additionally charge a $13,000 on this property, a $13,000 what's called a sourcing fee, a one-time sourcing fee. So that brings it up to $472,000 that they're offering it to us. That's a little rough for me. If the purchase price and they're buying it listed on the market, that's going to be basically a retail price, regardless of what they say, of they say $400,000. Then they're reselling it to us at $472,000. And then they're getting, you're buying shares of that. So there's 47,000 shares available at $10 an IPO price per share. But I'm still kind of uncomfortable with that $72,000 basic. It's kind of a markup. A lot of it's a markup. I do admit $31,000 is for improvements and for cash reserves. So that is good. I don't think this is necessarily absolutely horrible. So I'm not saying don't invest in Arrived Homes at all. Just be careful on the pricing. I mean, if this is all the options you have in real estate and you really want to get involved, I would absolutely look at it. But realize you're in it for 5 to 7 years and you're going to be looking for some appreciation growth to offset, obviously, those high costs. You will participate also in the annualized rents that have been going up over the years, but kind of have stabilized, so might not see much of that. So you're looking at a longer-term strategy. But it is a way to get involved in real estate. But when this is what this video is more about, what I really like about Arrived Home is they have this other thing called the private credit fund that you can invest in. Now, this fund basically it invests in a pretty diversified portfolio of short-term loans secured by residential real estate, and they've provided a pretty good 8.1% annualized yield to investors. So what it is, it's short-term loans that are used to finance professional real estate projects. The projects can include renovations, rehabs, even new construction. And these are managed, like I said, by real estate professionals. All the loans are secured by residential housing with loan periods ranging from like 6 to about 36 months. And the loans range from $100,000 typically to $500,000, but they say they do evaluate loans lower at $50,000. And they also do look at loans at a higher rate of up to $10 million. So the fund that generates cash returns by collecting interest payments on the loans and distributing them to investors, us, on a monthly basis. Since these loans are secured by residential property as collateral, in the event of a default by the borrower, the properties can be foreclosed on and sold, so it allows some more routes to recovery, as compared to investments without real estate collateral. Right now, and this is the beginning of 2026, they have 64 active loans, and they have 132 completed loans, and that's fantastic. They also have $71 million of total net assets invested. So that's a pretty good amount of money spread over a decent amount of projects. So you've got a lot of coverage there on, like I said, 64 different projects right now if you're investing in this fund. I really like this idea. And so do 21,000 other investors that have participated in this fund. So the Arrived Homes Private Credit Fund is a mortgage REIT, an REIT, real estate investment trust. It buys loans. Investors are equity shareholders in the REIT, exposing you guys to real residential real estate debt investments, which is really hard to find and get into as an individual unless you just know a person that's investing in the property. But that is so highly risky. That's just the worst thing I ever hear of, when someone wants to borrow money from their friends to go do a real estate flip or a project, and then they just don't know what they're doing, and everyone loses all their money. This is a way that you can invest in a lot of those properties or a lot of those projects at once, diversified amongst right now 60 plus different properties. So you have a lot of, so it really basically spread the risk amongst a lot of different projects. So that was just a real quick take on the Arrived Homes, the private equity fund. There's a link in the description below if you want to go take a look at this. I would recommend looking at both sides. Look at their individual properties if you want to invest there, and then look obviously at the private credit fund. Now, if you want to invest, let's say you don't want to invest on this debt side of the private equity fund. You want to invest on the purchasing and the ownership participations fractionalized in a house. You can do the individual houses by going to the site, but they also run another fund, and I'm just going to mention it here. I'm not even going to go into the details, where you can invest in what's called the Arrived Home Single Family Residential Fund by putting that money into that fund, which right now has $21 million in it. They spread that across multiple individual properties that you'll see on the fractionalized side. So you can participate in a bunch of those properties at once, which spreads the risk. In case one isn't going so well, it's going to be annualized average over all of their properties like this, the fractionalized ones. And that's not a bad way to go either. So I would look into that.